risk-based pricing mean to you as a consumer when looking at buying a house? With the recent events that have happened in New Zealand, risk-based insurance is a very serious matter. Insurers are now looking at what they're insuring and making decisions that this house is not going to be insurable. So when you purchase a home, it's something which you must be very careful about assessing what are the long-term risks for flood, landslips, anything that will make an insurer say, no, we don't want to do this anymore. Because the effect of that on you as a home owner is that you now have an insurance, an asset which is uninsurable. And if that happens, in reality it becomes almost unsaleable, or certainly unsaleable at the full market price, because a person buying the home or your home would need to have insurance, particularly if they have a bank involved. So in the New Zealand market, with recent events, insurers, and IAG was in the newspaper last week stating that they were going to start to withdraw from markets where these risks were prevalent. So homeowners in those areas will find themselves with a notice saying, end of renewal, your house is not insured, find alternatives. Well, that's great if you can find an alternative. But with so many things, when one insurer draws a line in the sand, you can almost guarantee that the others will follow. And particularly when it's a major insurer like IAG. This will become a major question when you're looking at a house. Not whether it flooded last week or was affected by a recent weather event, but banks and insurance companies will start to look at what's the possibility of it being affected. And if you're sitting in a house now which has those sorts of risks around it, as a homeowner, you obviously are then at risk, because one day the insurer may say, we don't like this anymore, and withdraw cover. And when that day comes, and you've got an uninsurable asset, the value of that asset will drop. Now, this won't be a nationwide, every house is going to be affected, but it's the start of risk-based insurance, so that the insurer is looking at every risk. For years, they've looked at areas for earthquake risk, for cyclone risk, but earthquake has obviously been the major one. If you live in an earthquake area, they want to know whether you've been affected by an earthquake, if you've had any damage, you've had it repaired, and they charge a premium. If you've moved from Auckland to Wellington, you'll know that the insurance risks are far more expensive in Wellington or in the earthquake zones than it is in areas which don't have earthquakes. So this is just not so much a warning, but a notice. And if you're buying a house, looking to buy a house, looking to move house, looking to upgrade house, this is just yet another consideration that you have to make. Is this house going to be able to be insured in the time, for the time that I own the house? Because if it looks like it mightn't be, the value of your asset will be significantly affected. It's a sign of the times. Call it global warming, call it what you like. The fact is, insurance companies are going to start looking very closely at the risks they are insuring and price accordingly and decide whether to insure it all. So my advice is look very closely at the area you're buying and look at what the insurance risks are for that home so that you can maintain an asset which is going to be saleable at any time in the future. Anyway, thank you.